How to Identify a High-Growth Property Investment Opportunity. By Dr.Pooyan Ghamari, Ph.D., Swiss economist. Investing in real estate can be highly rewarding, especially if you can identify properties with significant growth potential. These opportunities promise substantial value appreciation and lucrative returns. However, recognizing such opportunities requires careful analysis, thorough research, and a good understanding of market trends. This article will guide you through the key factors to consider when looking for high-growth property investments. Location is key. The location of a property is the most critical factor affecting its growth potential. Here's what to look for. Economic vitality. Invest in areas with strong economic activity. Cities with diverse industries, low unemployment rates, and growing economies are typically better investment options. Infrastructure improvements. Areas with ongoing infrastructure projects, such as new roads, public transit systems, schools, and hospitals, are likely to see property value increases. Access to amenities. Properties close to amenities like shopping centers, parks, schools, and recreational facilities are generally more desirable, which can drive up demand and prices. Neighborhood trends. Look for neighborhoods on the rise. Gentrification, for example, can lead to significant property value increases. Research the market and trends. Conducting detailed market research is essential to understanding current and future property trends. Supply and demand. Analyze the housing supply and demand in the area. High demand with limited supply typically leads to higher property prices. Rental yields. Check the rental yields in the area. High yields can indicate strong demand for rental properties, suggesting potential for growth. Historical price trends. Examine the historical price trends in the area. Consistent price increases over the years can indicate a stable and growing market. Future developments. Stay updated on planned developments such as new business districts, tech hubs, or entertainment venues that can attract more residents and businesses, boosting property values. Economic indicators. Pay attention to economic indicators that can signal growth potential. Employment rates. Areas with low unemployment and job growth attract people, increasing housing demand. Population growth. A growing population, especially among younger demographics, can drive housing demand and property value appreciation. Income levels. Higher income levels in an area often correlate with the ability to afford higher property prices, driving growth. Government policies. Favorable policies, like tax incentives for property developers or buyers, can stimulate market growth. Property quality and potential. Assess the quality and potential of the property itself. Condition and age. Newer or well-maintained properties are more attractive to buyers and tenants and usually require less immediate investment in repairs. Development potential. Look for properties with potential for development or renovation. Properties that can be upgraded or expanded offer higher returns. Comparable properties. Compare the property to similar ones in the area. Properties priced below market value for their type and location may have greater appreciation potential. Risk assessment. Evaluating and managing risks is crucial. Market volatility. Understand the volatility of the market and be prepared for potential downturns. Regulatory environment. Be aware of local regulations and zoning laws that could affect property use and value. Economic cycles. Recognize that property markets are cyclical and be prepared to hold the investment through different phases of the cycle. Identifying a high-growth property investment opportunity involves analyzing the location, conducting thorough market research, considering economic indicators, assessing property quality, and evaluating risks. By taking these factors into account, you can make informed decisions that enhance your chances of achieving significant returns. Real estate investment requires diligence, insight, and sometimes a bit of intuition. Dr.Pooyan Ghamari, PhD, Swiss economist. By following these guidelines, you will be better equipped to navigate the real estate market and find high-growth investment opportunities that can enrich your portfolio and secure your financial future.